Welcome to our deep dive into Federal Bank. We're going to be cracking open their second quarter results for fiscal year 2025.
All right.
Sifting through their official filings and their investor presentation,
Yeah, they're
they're throwing around phrases like record-breaking and all-time highs left and right.
a lot of that in there.
Yeah. Our mission today is to cut through the financial jargon and figure out
Right.
what's really going on.
Yeah. Is Federal Bank genuinely exceeding expectations?
Right.
Or is this just standard industry hype? And what does it all mean for you?
Yeah, for the average person who's maybe thinking about investing
Absolutely.
or just even banking with Federal Bank.
That's right. It's not just hype.
Okay.
Their net profit crossed 1,057 core.
Wow.
That's an 11% jump from the same time last year.
Okay.
Now, to put that into perspective, the average growth rate for banks in India right now is hovering around 7%.
Oh,
So Federal Bank is definitely outperforming
interesting.
some of its peers.
So they're not just riding a general upward trend. They're exceeding it.
Absolutely.
And it's not just the profit that's skyrocketing.
And it's across the board.
Their operating profit,
Yeah.
the money they make before factoring in things like loan losses,
Yep.
also hit a new high of 1,565 crore.
It did.
What in the world is driving this success?
Well, one key factor is their loan portfolio.
Okay.
Their total value of loans,
All right.
what's called the loan book, grew by a healthy 19% year over year.
Wow.
And they're being strategic about it,
Okay.
focusing on what they call high-margin lending products.
Yes, I saw that in their presentation.
That's good stuff.
They're pushing credit cards, personal loans, and loans to small and medium businesses.
Exactly.
But why are these types of loans more profitable for the bank?
Well, think of it this way. These loans typically carry higher interest rates
Okay.
compared to, say, a large corporate loan or a mortgage. There's a bit more perceived risk involved in lending to individuals and smaller businesses.
Makes sense.
So the bank charges a higher rate to compensate for that risk.
Okay, that makes sense. But there's more to it than just high interest rates, right?
Absolutely.
How else do these loans contribute to their bottom line?
Well, federal banks also done a commendable job managing their costs.
Okay.
They're keeping a tight rein on operating expenses,
Uh-huh.
which makes them even more efficient
Yeah.
at turning those high-interest loans into profit.
So it's a combination of strategic lending and savvy cost management.
Got it?
Speaking of strategic lending, I noticed a significant trend in their portfolio, a gold rush.
Oh, yeah?
Their gold loan portfolio exploded with a 31% growth year over year.
It's huge.
Are people turning to gold as a safe haven in these uncertain times?
Well, it's a fascinating trend. It begs the question,
Yeah,
is this specific to Federal Bank, or are we witnessing a broader economic shift?
right.
To really understand, we'd need to look at industry-wide data.
Yeah.
Are other banks experiencing a similar surge in gold loan demand?
Mm.
Or is Federal Bank capturing market share from its competitors?
That's a great point.
Huh.
Now, on the flip side, you can't lend money if you don't have money to lend.
Right. You need deposits.
How are they doing on the deposit side?
Well, their deposit growth is healthy, up 16% year over year,
Okay, that's not bad.
which shows that Federal Bank is continuing to attract and retain customers,
Okay,
which is crucial for any bank.
that's reassuring. But I'm curious, what should we be paying attention to within that deposit growth?
Oh, absolutely.
Is there anything specific that stands out to you?
One important factor is their CASA ratio.
Okay.
That's the proportion of deposits that are in current and savings accounts.
Okay.
These accounts are cheaper for the bank to maintain compared to, say, term deposits, where they had to pay a fixed interest rate.
Yeah.
A higher CASA ratio translates to higher profitability.
So it's not just about the total amount of deposits.
That's right.
It's about the type of deposits they're attracting.
Exactly.
Got it. Now, another thing that caught my eye in their reports was their emphasis on asset quality.
Yeah, they're very proud of that.
They're actually improving their percentage of non-performing assets,
Yes.
those dreaded NPAs, and they're setting aside more money than ever
That's right.
to cover potential losses through what they call their provision coverage ratio.
That's a really important point.
Yeah.
Improving asset quality is crucial for a bank's long-term health.
Okay.
It basically means they're doing a good job of lending to borrowers who can actually repay their loans.
Got it.
This minimizes the risk of losses, strengthens the bank's overall financial position, and allows them to continue lending and growing their business.
So it's not just about chasing profits.
Nope.
It's about building a sustainable foundation for the future.
Exactly. And that high provision coverage ratio,
Yeah.
that extra cushion of money they're setting aside, provides a buffer against unexpected economic shocks. It's like they're proactively preparing for a rainy day.
Now, Federal Bank isn't just your old school brick and mortar bank.
No.
They're making a big push into digital banking,
Yeah.
which I think is quite exciting. They've got a slick mobile app. They're partnering with fintech companies, and a whopping 90% of their transactions are now digital.
That's where things get interesting for you,
Right.
the potential customer. This digital push could mean more convenience,
Yeah.
potentially better rates,
Okay.
and access to more innovative features. It might be worth checking out what Federal Bank offers in the digital space.
I totally agree. It seems like they're trying to position themselves as a modern, forward-thinking bank.
Yeah.
But they also want you to know they're not just about profits.
Right.
They're about doing good, too.
The ESG angle.
They've laid out some ambitious targets for environmental sustainability, social responsibility, and good corporate governance.
They're certainly jumping on the ESG bandwagon.
Right.
But the cynical part of me wonders,
Yeah.
is this genuine or just a clever marketing ploy?
Is it greenwashing?
Or are they truly walking the walk when it comes to sustainability and social impact?
Right.
Or are they just talking the talk?
That's the million-dollar question, right?
It is.
It's easy to make claims.
Yeah.
But are they actually backing them up with concrete actions?
Well, that's what we need to find out.
That's what we need to figure out. We'll have to delve deeper into their specific initiatives
Absolutely.
and track record to assess the authenticity of their ESG commitments. But one thing that caught my eye
What's that?
was their recognition as a gender equality champion. That suggests they're at least making some effort to promote diversity and inclusion.
It's a good start.
Good point. And speaking of recognition, Federal Bank has been racking up quite a few awards lately.
They have.
Best CFO, FinTech Woman of the Year. They're definitely doing something right to earn those accolades.
Those awards speak to their financial performance,
Yeah.
leadership, and innovation. It seems like they're hitting the mark on multiple fronts.
Right.
But let's not get ahead of ourselves.
Yeah.
Awards are just one piece of the puzzle.
Agreed. We need to look at the bigger picture and assess their overall strategy and long-term prospects. So if we connect all the dots,
Yeah.
what does this first glimpse tell us about Federal Bank?
So far,
Yeah.
Federal Bank is painting a pretty impressive picture.
Okay.
Strong growth, healthy finances, a push into digital, and a commitment to ESG. They seem to be firing on all cylinders.
It sounds like it.
But, and there's always a but.
There's always a but. In the world of finance,
Right.
a lot hinges on their ability to keep those high-margin lending products growing.
That's a crucial point. What happens if the economy takes a downturn? Can their current strategy weather the storm?
Right.
Or are they overly exposed to certain risks? That's what we need to explore next.
You're reading my mind. Let's dive into their risk management practices and see how prepared they are for potential challenges.
Sounds good.
Yeah.
Let's do it.
Yeah.
Okay, so Federal Bank is on a roll. But can they keep up this momentum if the economy takes a hit? How do they manage risk? Well, one of the first things to examine is their loan portfolio composition. Think of it like a recipe. If you have too much of one ingredient,
Yeah.
it can throw off the whole dish.
Right.
The same applies to a bank's loan portfolio. If they're overly concentrated in one sector,
Okay.
say real estate,
Yeah.
and that sector experiences downturn, it could spell trouble.
I see. So diversity is key.
Absolutely.
Looking at their investor presentation, they seem to have a pretty good mix, don't they?
They do.
Retail banking, wholesale banking, housing loans, vehicle loans, and of course those gold loans we talked about.
It's a pretty diverse portfolio.
You're absolutely right. The diversification is a positive sign.
It is.
It spreads their risk across different borrower segments and industries. It's like having a safety net with multiple layers.
Exactly.
But a diversified portfolio isn't enough on its own.
Right.
We also need to consider the quality of those loans.
Absolutely.
Remember those non-performing assets or NPAs?
Oh, yeah, the loans that are basically going bad.
Yeah, the loans that are basically souring Federal Bank seems to be doing pretty well on that front, though.
They are.
Their NPA percentage is actually improving, which is a good sign, right?
It is indeed. They've managed to bring down their gross NPA ratio to 2.09%.
Okay.
To put it simply, that means a little over 2% of their total loans are considered non-performing.
Okay.
And their net NPA ratio, which factors in the provisions they set aside to cover potential losses, is even lower, at 0.57%.
Okay, so those are the numbers, but what do they actually mean?
Right.
Is that good or bad? What's a healthy NPA ratio for a bank?
Well, there's no magic number,
Okay.
as it can vary depending on various factors like the bank's size,
Sure.
the types of loans they make,
Right.
and the overall economic climate.
Of course.
But generally, a lower NPA ratio is better.
Okay.
It indicates that a smaller portion of the bank's loans are at risk.
Got it.
Federal Bank's current ratios are quite healthy, especially when compared to historical trends and industry averages.
So they're doing a better job than many of their peers at managing those risky loans.
They are.
And remember that provision coverage ratio we mentioned earlier?
At a PCR?
It's like their insurance policy against potential loan losses. It's essentially a buffer that protects their profitability and capital if borrowers start defaulting. Federal Bank's PCR has actually increased to 71.82%.
Wow, that's a lot.
71.82%. That sounds incredibly cautious.
It does.
It seems like they're really trying to protect themselves from potential losses. But what does that mean in practical terms?
Right.
How does that high PCR impact their business?
Well, there's a trade-off. Setting aside a larger portion of their profits to create this cushion can impact their short-term profitability.
Makes sense.
But it's a smart move for the long haul.
Okay.
It strengthens their financial foundation
Right.
and protects them from unexpected shocks.
So it's like taking out a comprehensive insurance policy. You pay a bit more upfront,
Yeah.
but have peace of mind knowing you're covered if something goes wrong.
Precisely. It's a sign of prudent risk management.
Okay.
And another key metric for assessing a bank's ability to withstand financial shocks is their capital adequacy ratio, or CRR.
Mm-hmm.
It's a bit technical,
Okay.
but essentially it measures how much capital a bank has compared to its risk-weighted assets. Think of it as a measure of its financial strength and stability.
And I see here that Federal Bank's CAR,
Yes.
under something called the Basel III framework, stands at 15.20%.
That's good.
What does that tell us?
Well, Basel III is a set of international regulations for banks aimed at strengthening their capital base and improving their ability to withstand financial crises. Think of it as a global rulebook for keeping banks safe and sound. Federal Bank's ERR of 15.2% is well above the regulatory minimums, indicating they have a strong capital buffer.
So that's another positive sign for their risk management strategy.
It is.
They're diversified.
Yep.
They're managing their NPAs well. They've got a healthy provision coverage ratio.
They do.
And their capital adequacy is strong. It all sounds pretty solid.
They're definitely ticking a lot of the right boxes.
They are.
But it's important to remember that no bank is completely immune to risks, even with robust risk management practices in place.
That's true. What specific risks do you think Federal Bank might face in the coming years?
Well, one potential challenge stems from their reliance on those high-margin lending products we discussed earlier.
Okay.
While these products are currently driving profitability,
Yeah.
they can also be more susceptible to economic downturns.
Right.
For example, if interest rates rise significantly, borrowers might struggle to repay their loans,
Of course.
which could lead to an increase in NPAs.
So it's kind of a double-edged sword.
It is.
High rewards,
Yeah.
but potentially higher risks too.
Exactly. Federal Bank needs to strike a balance between pursuing growth through these high-margin products and managing the associated risks very carefully.
Another thing that comes to mind is their big push into digital banking.
Right.
While that's great for convenience and innovation,
It is.
doesn't it also expose them to new risks, particularly in cybersecurity?
You're absolutely right. The digital realm presents new challenges, particularly in cybersecurity and data privacy.
Yeah,
Banks are prime targets for cyber attacks,
for sure.
and any breach could result in significant financial losses,
Absolutely.
reputational damage, and regulatory scrutiny.
So how can we assess their cybersecurity preparedness?
That's a good question.
What should we be watching for?
Look for transparency in their communications.
Okay.
Do they openly discuss their cybersecurity strategy and investments?
Okay.
Have they obtained any relevant certifications
Got it.
or undergone independent audits?
Okay.
And of course, track their track record.
Yeah.
Have they experienced any major security breaches or data leaks in the past?
Okay. So transparency, certifications, track record. Those are good things to keep in mind.
They are.
But cybersecurity is constantly evolving. Can they really stay ahead of the curve?
That's the million-dollar question. It's a constant arms race. Banks need to continuously invest in upgrading their systems,
Right.
training their staff, and collaborating with industry partners to stay one step ahead of the cybercriminals.
It sounds like a never-ending battle.
It can feel that way sometimes.
But beyond cybersecurity, what other challenges do you see on the horizon for Federal Bank?
Well, competition is always a factor in the banking industry.
Yeah.
They're facing pressure from both traditional banks and new fintech players.
Of course.
They need to constantly innovate and adapt to stay ahead of the game.
That makes sense.
Yeah.
So we've got the potential for economic downturns impacting those high-margin loans,
Right.
the ever-present threat of cyber attacks,
Yep.
and fierce competition from both traditional and new players.
Mm-hmm.
Anything else we should add to the risk radar?
Well, regulatory changes are always a wild card. The banking industry is heavily regulated, and any shift in regulations can significantly impact a bank's operations and profitability. Federal Bank needs to stay agile and adaptable to navigate the ever-changing regulatory landscape.
It seems like they're juggling a lot of balls in the air,
They are.
but let's not forget about their strategic partnerships.
Oh, yeah. Good point.
They're actively collaborating with fintech companies, leveraging their technology and expertise to enhance their digital offerings.
Exactly.
Right? I read about some of those partnerships in their investor presentation. They're teaming up with companies to expand their credit card offerings, provide instant digital loans, and even venture into merchant payments.
It's a smart strategy.
Those partnerships can be a strategic advantage, allowing them to innovate faster and reach new customer segments without having to build everything in-house.
Absolutely.
It's like they're tapping into a network of specialists to enhance their capabilities.
Exactly. But like any strategic move, partnerships also come with risks. They need to carefully vet their partners,
Of course.
ensure compliance with regulations,
Yeah.
and manage data security and the overall customer experience. It's a delicate balancing act.
Lots of potential benefits, but also potential pitfalls to watch out for.
There are?
It seems like there's a lot to consider when evaluating Federal Bank's performance and future prospects.
There is.
But let's shift gears for a moment and take a closer look at those ESG initiatives they're so keen to highlight.
Okay.
Are they genuinely committed to sustainability and social responsibility, or is it just a clever marketing ploy?
Yes, the greenwashing question.
Let's peel back the layers and see what lies beneath those sustainability claims. All right, let's talk about Federal Bank's commitment to ESG, environmental, social, and governance factors.
Okay.
It's become such a buzzword these days.
It really has.
I have to admit, I'm always a bit skeptical when companies start touting their do-gooder credentials.
Yeah.
Are they genuinely trying to make a positive impact, or is it just a PR exercise?
It's a valid concern.
Yeah.
We're living in an age of greenwashing, where companies often exaggerate or misrepresent their environmental and social impact to appeal to conscious consumers and investors.
Right.
So let's dig into the specifics of Federal Bank's ESG initiatives and see if there's substance behind their claims.
Looking at their reports and presentations, they've set some ambitious goals.
They have?
They're talking about expanding their green portfolio to 13,000 crore by December 2025.
Wow.
They're also aiming to increase in-house solar power generation,
Okay.
promote water conservation, support women entrepreneurs, and even get their bank premises certified as environmentally friendly.
That's a lot.
It is.
Those are certainly some ambitious targets.
Yeah.
And it's worth noting that as of September 2024,
Okay.
they've already surpassed their goal for financing women entrepreneurs.
Really?
Through their business correspondent channel, they've also made progress in growing their green portfolio,
Okay.
which currently stands at 8,321 crore.
Okay, so they're making some headway. But how do we know if these achievements are truly meaningful or just low-hanging fruit?
Right.
What's the benchmark here? How do they stack up against their peers?
That's where things get tricky.
Yeah.
Measuring the impact of ESG initiatives is a complex and evolving field.
Yeah.
There's no universally accepted standard.
Right.
And companies often use different methodologies, making comparisons difficult. It's like comparing apples to oranges.
So how can we as outsiders assess the genuineness of their efforts?
Well, one important factor is transparency. Does Federal Bank clearly define their ESG goals?
Okay.
Do they provide detailed information about their methodologies and progress? Right. Are they open about their challenges and setbacks?
I'm looking through their reports now.
Okay.
And they do have a dedicated environmental and social committee that oversees their ESG strategies.
Good.
They also mention various certifications they've obtained for their information security and business continuity management systems.
Okay.
But I don't see any specific mention of independent audits for their ESG reporting.
That's an interesting observation.
Yeah.
While those certifications are positive signs,
Sure.
independent audits would provide greater assurance and credibility to their claims. It would demonstrate that they're willing to subject their ESG performance to external scrutiny.
So it's not a black and white issue.
It's not.
There are some positive steps, but there's also room for improvement in terms of transparency and independent verification.
Mm.
Now let's shift gears for a moment and address something that's been on my mind. Their gold loan portfolio is booming.
Yes.
But what are the ethical implications of promoting gold loans,
Right.
especially in a country like India where gold holds such deep cultural and economic significance?
That's a great question, and it raises some important considerations.
Yeah.
Gold loans have long been a popular form of credit in India, often used by people who lack access to traditional banking services.
Okay.
They can be a lifeline for individuals and small businesses in times of need.
But we also have to acknowledge the potential downsides, right?
Of course.
Gold can be a volatile asset.
It can.
And if prices drop, borrowers could face significant losses
Yeah.
or even lose their precious collateral.
You're highlighting a crucial point. Responsible lending practices are essential in the gold loan sector.
Okay.
Lenders need to ensure that borrowers fully understand the risks involved,
Right.
provide clear and transparent terms and conditions,
Of course.
and avoid predatory lending practices that could exploit vulnerable individuals.
So it's not about demonizing gold loans altogether.
Right.
It's about ensuring that they're provided responsibly and ethically.
Exactly. Federal Bank, as a responsible lender,
Right.
should prioritize ethical considerations in its gold loan operations.
Okay.
Transparency,
Yeah.
fair pricing,
Mm-hmm.
and customer education are paramount.
Okay, so we've covered a lot of ground today.
We have.
We've analyzed Federal Bank's impressive financial performance, delved into their risk management strategies, explored their digital transformation, and even grappled with the complexities of their ESG initiatives.
It's been a thorough deep dive.
What's the key takeaway for our listeners?
Well, Federal Bank is a dynamic and ambitious institution that's clearly making waves in the Indian banking sector. They've delivered strong financial results, expanded their reach through digital channels,
Right.
and demonstrated a commitment to sustainability and social responsibility.
They're certainly a company to watch, but what should our listeners keep in mind as they follow Federal Bank's journey moving forward? What are the key things to pay attention to?
First, keep an eye on those MPAs.
Right.
Are they continuing to improve their asset quality? Or are those risky loans starting to creep up? Second, monitor their provision coverage ratio.
Okay, NPAs and PCR.
Yes.
What else should we be tracking?
Pay attention to their digital banking initiatives.
Yeah.
Are they experiencing any security breaches or customer data leaks? How are they adapting to new technologies and regulatory changes in the digital space? And finally, don't forget about their overall capital adequacy ratio.
Okay.
A strong CRR is crucial for weathering any unexpected storms.
So it's about looking beyond the headlines and digging into the details to get a true sense of their performance and risk profile.
Exactly. And as their business evolves, stay curious about their strategic choices, risk management practices, and the authenticity of their ESG commitments.
Well, this deep dive has given us a lot to think about.
It has.
It's been a fascinating journey behind the scenes of a bank that's clearly on the move.
And on that note, we conclude our deep dive into Federal Bank. Until next time, keep learning and stay curious.